Gerard Cassidy, Capital Markets, co-head of Global Financials Research, joins us to unpack some of those numbers. Gerard, how about surprises so far this morning? What do you think?
Carl, it's been quite good, as you see from the stock price reaction for both Wells Fargo and JP Morgan. I think many of the short-term traders were positioned to see weaker numbers from JP Morgan. That didn't happen. Might be some short covering going on to drive the value up. But when you take a look, and you guys have been talking about the behavior of the consumer, JP Morgan Chase in this quarter, in my view, probably spoke the strongest about the consumer and the behavior of the consumer in spending. And that's a real positive for the economy, of course. So overall, credit quality, real good for both companies. Capital, very strong. You know, there's some ins and outs of the net interest income that vary from quarter to quarter, but the initial read on these numbers are good.
Sounds like Dimon got a little annoyed at the questions about fiscal 25 net interest income, and I think you know what I'm referring to. Next time, you just give him the damn number, he says. I don't want to spend all my time in these calls going through what they're guessing what NI is going to be next year.
Carl, you know, I thought of at the time that movie with Jack Nicholson where he plays the general about you can't handle the truth, and then he admits to the problem. That was the Jamie Dimon moment of getting frustrated and then just said it'll be probably less than $87 billion for next year, which is consensus number. But yes, he got frustrated over that. He wanted to talk more about longer term strategy. JP Morgan is the quintessential best bank, big bank, and probably not only this country, but the world. They have done an excellent job with him in the leadership role.
But you had, you had Daniel Pinto a number of weeks ago sort of resetting expectations a little bit. So just bring us into sort of where things stand now, given what he was saying about just net interest income, but also capital markets activity, whatever that was, Gerard, 6 weeks ago or so.
Yeah, no, David, you're right. He lowered the guidance, or he gave indications that the 2025 net interest income levels, which at the time the street had them at $90 billion, were too high. And so now they were talking about 87 billion might be a little high for next year. We'll find out in January the actual number. But I think what the market's looking through that, because you're also seeing growth in fee revenues and credit quality is strong. In particular, as you mentioned, David, the investment banking numbers were really stronger than expected. And they pointed out that the DCM activity at the end of the quarter following the Fed fund rate cut was quite strong. So the read-through is, of course, Citi and Goldman and Morgan Stanley, when they report next week, probably will have better than expected numbers here. But it's also a good read into 25. If the Fed continues with these rate cuts, does that lead to stronger investment banking activity, which many people believe it will?
Yeah, that's a good point on those two. And as for Wells, I mean, Carl mentioned, of course, you know, not a beat across the board, but the stock reacting quite positively. Still this possibility of the asset cap being removed very soon. What do you attribute to this nice move higher?
David, you put your finger right on it. It's, I think, all about the asset cap. That's the focus point. There was a story out in the media a couple of weeks ago that they're one step closer to getting that removed. It looks like it's going to happen in 2025. Once again, the credit held up nicely at Wells. Wells has had a little bit of a struggle with their commercial real estate office portfolio. You look at it over the last 18 to 24 months, it's deteriorated with the market. This quarter, it stabilized. So that was, I think, a big plus. Consumer credit improved for them this quarter. So you had nice credit numbers here for Wells. And then the prospects of the cap being lifted in 25, I think, is another focus point for investors.